Welcome back. The other company on our radar right now is Pearl Global. It's reported a strong set of fourth quarter earnings. More importantly, for the year as well, the revenues jumped between 30 to 40%. The question is, where do they go from here? Pallab Banerjee, who's the Managing Director and Group President of the company, joins in now. Thanks a lot, Pallab, for joining in. Two-part question. One, will you sustain this revenue run rate going forward? What's your expectation? And secondly, with all that's happening in the US and the free trade agreement with the UK, what are the opportunities for the next couple of years?
Thank you, first of all, for having me on this show. Yes, as a company, Pearl Global, we have a growth plan, and we have been growing at quite a reasonable rate, and we'll continue to do so. And see, most probably, all these garment industry, if we talk about, the largest global players, mostly from Taiwan or Korea, there are multi-billion-dollar organizations or sales top revenue that they generate. So our goal would be to compete with them and be a big global player. So that way we are looking forward to a good future, like in which we will be continuing to grow quite aggressively, I would say.
So 30% sustainable, 25% sustainable, because the base also increases, right?
Our CAGR that we have been planning is about 15%, 12 to 14% is something that we have been talking about. And yes, when the opportunities are there, like, the market is disrupted at this point of time due to various reasons. And this is the time that, if you are a strong company, then that's the time to gain your market share. So this year we got a good share, almost about 30% we grew. It looks like in the next few quarters, it's looking like that this kind of similar kind of, not maybe 30, but a little less, but that kind of, it is still showing. But yeah, on an annual scale, we would say that definitely we are confident that 12 to 14% we should be able to achieve.
Okay. Well, Pallab, the conversations with, peer companies have indicated that US clients are asking them to bear the cost if it comes to tariffs and the burden of the tariffs if it comes to that. Is that the case? Have you had any such conversations that you can highlight?
Yes. See, like most of these US companies, the US retailers and brands, they have reached out to all their suppliers to partner. And there are various ways partnership can be done. Most of these companies at this point of time is having a 10% duty, or extra tariff that is being done. So as you know that we have a WTO tariff, for example, for a cotton shirt or a cotton product, it's averaging around 17%. And now there's a additional baseline tariff of 10%. This is something which has been implemented on April 2nd. And that's why most of these retailers have come back to their supply base and say how that can be mitigated. So that's why some burden share discussion has happened. And now how do you circumvent it? One, you give some kind of discounts and help the retailer to absorb part of the cost that they absorb, something we absorb, and then something maybe passed on to the end consumer. Or the other way, how do we do it? There are two, three other things also can be done. So it's a combination of these three that most of these US retailers have asked for and been negotiating with their vendors.
So if they meet midway, what could the margin impact be? Because you're targeting 12 to 14% revenue CAGR. What is your margin expansion plan going forward?
So margin expansion plan is more than 12 to 14%. We have said that we should be expanding our margin by almost about 17, 18%. But then our exposure to US market is about less than 50%, I would say. So, and on top of it, we are implementing all these three models that I was talking about. So, for example, they are badly stuck in China. How can I help on those products rather than giving a discount? Then the second thing is if I can land the product, because most of these retailers have a higher cost of landing the product compared to us, we can maneuver faster and at lower cost. So, and the third is that simple, you don't do these two things and just give us some kind of discount. So that we have been negotiating. So it's a part of a simple negotiation that we do every quarter, every season. So I'm not overly, I would say, worried about it. Maybe for one quarter, it might come in the books because normally our costs are frozen with the retailers for about on a quarterly basis. So
sorry, you said EBITDA compounding should be 17 to 18%, right?
For us.
Yes, so that implies margin expansion. If you could, for the benefit of our viewers, currently your 9% EBITDA margin, what is an aspirational target and by when do you get there?
So we have said that we are looking forward to a double digit between 10 to 12%. And we have given a plan, most of our investors, that within the next 3 years, we should be doing it. But we are almost there now. We have almost crossed 9. We are touching almost double digit in this quarter. Also, we almost touched 10 because there are some new projects that we have started, which is still in losses. Otherwise, we should have been more than
Okay.
double digit.
The UK FTA, the India-UK FTA, how does that affect you all? And how much do you get in terms of revenue from the UK?
The UK currently is about overall approximately 5% of our revenue. And we have been servicing that market majorly from Bangladesh. As you know, the Pearl operates factories in Bangladesh, Indonesia, Vietnam, India, and Guatemala. So UK, most of our shipment has been going from Bangladesh already. And these customers, with the expectation of the FTA, have been talking to us for the last few quarters and have started doing some business in India as well. So we look forward to definitely the India component will be going almost about 3x or maybe 4x over the next 1 to 2 years. And it should benefit us. Rather than servicing from one country, now we should be servicing them from 3 countries. As you know, that even Vietnam also got into that comprehensive trade Trans-Pacific Pact, because of which they also have the same kind of benefit. So it's a very dynamic movement in the world at this point of time, and the opportunities are coming.
And where would your incremental capex be, considering that it is completely dynamic, in terms of opportunity? So any kind of incremental capex that you have on the cards, and where would it be?
So we are, in fact, our major production is happening in Bangladesh, India, and then followed by Vietnam. So in all these 3 locations, we do have capex plans. For Bangladesh and India, definitely we are going ahead with it.
Okay.
Right. And what about CapEx? How well utilized are you? What's your capacity expansion plan from here on? How do you fund it?
So we have been funding our CapEx. We had a QIP also done some time back. So we had that fund which have been allocated this year. And then apart from that, the kind of cash that we are generating, that's going back into the CapEx. So that planning we have shared with our investors, and that's something that we will be implementing. So the next year, I think we are talking about almost about 230 crores. We already have a plan, plus some more opportunities that we are looking at.
And the asset turnover that you're looking at?
Asset turnover, if you've seen, ROCE has touched almost 30.1, and ROE also is about 20.1 at this point of time. We would be maintaining or having a similar kind of run.
Okay. Just quickly, you have operations in Bangladesh. Just wanted a sense, there are these new import rules which have come through as well. Any kind of impact on business that you can share?
So what our business is that we are supplying to the global retailers and the brands across all the markets. Like I told you, markets like USA, UK, Europe, Japan, Australia. We are not so far very focused on Indian market or China market as of yet. So the import restriction that you're talking about is the goods that is imported from Bangladesh into India. So that doesn't affect us at this point of time.
Okay, all right. We're going to let it go on that note. Thanks very much for joining in and speaking with us. So that's Pearl Global. They're targeting a revenue CAGR of 12 to 14% over the medium term, and a bit cautious about the trade tariffs and the negotiations at this point in time. We'll take a short break, but more on the markets, and we'll focus on F&O once we're back. Stay tuned.